Bitcoin spent the week trading inside a tight liquidity window as macro pressure eased. ETF flows flipped back into inflows, and whales stepped in to absorb miner selling. Today is July 13th, and the signals from the last 7 days show a market that is stabilizing, even while supply dynamics remain active. This was a week where Bitcoin's price didn't tell the full story. ETF flows recovered, miner reserves hit new lows, whales accumulated aggressively, and regulatory clarity improved across both the United States and Europe. Underneath the quiet price action, the market was repositioning for the next macro leg. Bitcoin's structure this week was defined by compression. BTC traded inside a narrow $61,000 to $63,000 band, the tightest weekly range in 3 months. There was no cascading liquidation, no structural breakdown, and no trend failure. Instead, the chart showed controlled downside and steady absorption, the kind of structure you see when large players are willing to take the other side of short-term supply. Volatility cooled, and the market stayed balanced. Flows showed the real shift. After 2 weeks of outflows, spot Bitcoin ETFs flipped back to $142 million in net inflows, led by BlackRock and Fidelity. At the same time, miners sold more than 3,000 BTC, pushing miner reserves to a 20-month low. But whales absorbed that supply, adding more than 9,000 BTC and pulling 12,000 BTC off exchanges. This is classic accumulation behavior. Short-term flows were neutral, long-term flows were constructive. Institutions saw 2 major developments this week. The European Union finalized its digital asset Sentiment stayed muted but stable. Hash rate recovered more than 4% after June's heat-related energy disruptions, showing strong network fundamentals. Funding remained neutral. Open interest stayed balanced. Retail stayed quiet. And corporate treasury buying ticked up slightly, rising 6% week over week. This was a sentiment profile defined by patience, not panic. Builders kept building, miners kept selling, and whales kept accumulating. The forward outlook for Bitcoin is defined by 3 forces: ETF inflows returning, miner stress creating short-term supply, and whales absorbing that supply while volatility compresses. If macro conditions remain stable, this kind of compression often becomes the foundation for the next expansion move. The market is not trending yet, but it is preparing. The next major shift will come from liquidity, not headlines. Now, if you want a clean framework for reading weeks like this without getting lost in the noise, that's exactly why I wrote Understanding Crypto, a clear guide for new investors. It shows you how structure, flows, and sentiment fit together so you can read the market the same way institutions do. And of course, I'll put a link up for you. So please follow for full breakdowns and tell me what stood out to you this week. Your take helps shape what I cover next. Stay locked.